Hey guys, Stock Saturday, and it's a slightly green week for me, slightly better than the markets. Up 3.6%, about 58 grand. Pretty happy with that. Compared to the Nasdaq, up 1.23%, reaching new all-time highs, I believe. Oh no, not quite for the Nasdaq. The S&P believe has done 1.07% for the S&P, and yeah, it's Nasdaq was slightly higher in October from the looks of it, and the S&P obviously slightly more broad index. I think if you even look at the equal weighted S&P, it's done better than this. So sort of Mag 7, or some of Mag 7 at least, lagging behind a little bit, and the sort of gains broadening out to the rest of the S&P 500, which has to be a good thing. Some see this as sort of, the biggest stocks lagging behind could be a rolling over of the index, and we're going into a big downturn. But I don't know. I don't like sort of fading stocks going up and sort of debasement, really, as you know. So yeah, some interesting goings on this week. A few sort of changes. I deployed a little bit of my cash in the Trading212 ISA and topped up a couple of the ETFs. Why, I have put the weekly change in this week, but yeah, difficult to sort of allow for deposits and withdrawals. So the world small cap looks up 33%, but that's just because I've bought a load, and the S&P 400 mid cap bought a load. So yeah, those are sort of up a few percent, but not quite that much. And all of the ETFs are still a long way off my sort of 40% of the portfolio target, but we'll get there at some point. So we had Taiwan Semi's monthly revenue. This was the final monthly revenue for 2025, so that's Q4 pretty much done with for most of the semis, and it was a fairly good number, sort of in the middle of their range, maybe low end of their range, 335 billion Taiwan dollars, 20.4% up on last year. So October, beginning of Q4, was 16.9%. So yeah, in the middle of the range for this quarter, and sort of a little bit, well, quite a lot below last year. But the sort of AI revenue obviously really started ramping up, part way through last year. So there was that to compare it to. But 20% year-on-year growth is still very, very strong, and it appears that it's going to continue. So very nice. We start getting, compared to 293 to 60. So you'd expect February, this coming February, to be a pretty strong year-on-year growth year, and then you start getting some harder months. Comparing to April's 349, could potentially be lower than that. So we'll have to see. Got the monthly update for Hive. They seem to be one of the only, one of the miners that I've been looking at who are still doing monthly updates. Some of the others seem to have rather given up. Herein and Marathon specifically. But yeah, 306 Bitcoin for the month. That was pretty good. They've been increasing their hash rate ever so slightly. I think they sort of averaged 23.3, peaking at 24 exahash. So they have 25, I think, on the books, but they're saying extreme cold weather. There's always sort of something that you might not be at that exactly 25 exahash, but it's not too bad. And difficulty had sort of come down. It's been coming slightly down over the last sort of 2 or 3 months after a sort of rocketing up for most of the year. But yeah, that does improve production a little bit from sort of 280 to 306. We'd still sort of plan on, or base my figures on this coming down every month, which I will come to in a sec. But yeah, fleet efficiency 17.5 joules is very strong, sort of among the best out there. And yeah, they're sort of talking about their enormous growth elsewhere, enormous growth in HPC, which yeah, I think it's worth having a look at. So I've been buying an awful lot of Hive, which I'll come back to on the portfolio. But yeah, I've been buying quite a lot of options for January next year, expecting or hoping for Hive to have a good year. And you may remember they're one of the stocks that I have lost quite a bit of money on so far, sort of thinking that they would do well last year. And yeah, sort of had some options expire worthless, and I haven't sort of added it up, but probably lost into five figures, over 10,000 quid. And I'm now having, another go, as I always say you have to sometimes with options, sort of lose 10,000. Some people might sort of move on and, forget about the stock and say good riddance, but I think sometimes you can be early and sort of reload, as I've done with Equinox Gold. I had sort of some options expire worthless and sort of bought a load more for January 2027, and they're now up 600%. So sort of eclipsed the amount that I lost last year, and a hell of a lot more on top of that. So in theory, I think the same could happen with Hive. So they keep talking about the Buzz HPC data center stuff. What better place to have a data center than in the snow, of course. But the sort of hesitation that I do have is their numbers sort of seem to be a little bit all over the place. So they're saying they're doing about 40 million annualized run rate revenue at the moment. Their recent quarter numbers would say probably closer to 20 million still. They did, I think, 5.5 million in HPC revenue in the last quarter. So, yeah, sort of not much more than 20 million. They are saying by this quarter that they will be at 40 million. And then they have this 2026 100 million annualized run rate revenue. So, yeah, that's maybe not including all of the GPUs that they say they are putting on. That's 4,000, or I'm guessing that is February. Yeah, so February they had 4,000 NVIDIA A series, and they've sort of been adding more H200s, and then this partnership with Bell Canada, the mobile phone people. They're saying has took them to 40 million and 100 million by the end of next year. But then you sort of look at their figures elsewhere, and then they suddenly come up with this 20 million in this year to the end of 2026, 225 million annualized run rate revenue, which is a hell of a lot higher. They say 225 million by end of 2026. That's partly co-location capacity, so sort of renting out your locations to other people, and GPU cloud, running the GPUs yourself, and sort of selling the hardware that way. But they're saying 225 by the end of 2026 here, and then if we look at their sort of global footprint, they're saying Toronto, Canada, Q4 2026 will add 40 million. Boden, Sweden, Q4 2026 will add another 40 million. And Manitoba, Canada will add 40 million. So that sort of takes you to 140 million by end of 2026. And then they have this New Brunswick, Canada, 85 million, which takes them to 225, but that's 2027. So not by the end of 2026. And I think they sort of mentioned that uh, later on as well. Yeah, so end of Q4 2026. This is still annualized run rate. So they're not saying they'll do 140 million in 2026. They're saying that will be a year on from 2026. They would do 140 million, and then 2027 225. So they're sort of a little bit, mixing the numbers here, sort of by a year, basically, trying to pretend that this 225 growth, the HPC 70 megawatt center is coming sooner than it is, if that's in 2027. But potentially over 2 years, they're saying it's 10x growth potential. It's just obviously if I'm January 2027, then I'm not actually going to see this 225, but it's whether people are pricing it in advance, basically. They do then give this, in theory, sort of enterprise management platform. They're sort of saying this is based on enterprise managed services revenue. So, yeah, a little bit higher, higher revenue than you can get for that because it's more complicated and yeah, not everybody can do this. A lot of the people still doing co-location deals where you basically rent your location out to them, and the sort of hyperscalers or AI people, whoever they be, will come in and put their own equipment in and sort of run it themselves, basically. But they're saying if Buzz manage all this themselves, then yeah, they could potentially get to astronomical numbers, 260 million by the end of this year, as opposed to 225 by the end of next year, and then 345 by the end of next year. I'm not sort of pricing in any of these numbers at the moment because Hive have been known to sort of under-deliver before. I think they said they were planning to get to 100 million, I think, by the end of last year, and they only got to 20 million. So they sort of keep putting off this target, as a lot of people do, and they just make a new presentation, showing this growth as if it was always the plan, and they never said 100 million by 2025. They are saying they'll get to 40 million, not the 20. The 20 is Q3. So yeah, still 60% short of that. They do show this ranking as well, presumably because they've done, I guess, relatively well in comparison on it. Semi-analysis GPU Cloud Cluster Max rating from November, so it's recent, a recent sort of award, if you like. And yeah, they sort of give platinum, gold, silver, bronze, and not recommended, companies, basically. They've sort of put all of these in here. In unavailable, you've got sort of Alibaba Cloud, you've got Bitdeer, another sort of Bitcoin miner. In underperforming, interestingly, you've got Herein in underperforming. I thought they were doing rather well, and the stock price sort of would indicate that they're doing a hell of a lot better than Hive and Buzz, but they're sort of in underperforming on this ranking. And then sort of the bronze awards, you have sort of various companies. Not really aware of too many of these. IBM Cloud, sort of obviously a fairly big player, but you've got Buzz in the bronze section, obviously hoping that they can maybe go up a tier. Silver, you have sort of Google Cloud, AWS, and the big boys, basically. And gold, you've got Oracle, Microsoft Azure, Nebius, and Fluid Stack. Some of the and then CoreWeave in the platinum. So CoreWeave and Fluid Stack, obviously the main people that have been getting involved with the Bitcoin miners. So interesting that they put CoreWeave at platinum. I didn't really sort of think they were doing quite that well, but yeah, interesting. Just a note for balance sheet as well. I think this does get forgotten about every now and then. That Hive didn't sell their Bitcoin. They have pledged 1,234 Bitcoin and 758. So it's sort of lending it out basically with the option to buy it back at the same price that they lent it out for. So, if Bitcoin goes up and Hive have, a reasonable amount of cash coming in, they have the option to buy 1,234 Bitcoin at 87,000 each. So, if Bitcoin's 150k, then that's basically an instant sort of profit, and another 758 at 115k. So even if it goes up to sort of 115, you can make a profit on this top tranche here, and maybe buy that back at break even, or buy it back if the price rockets up further. But yeah, there's potential for sort of a fairly easy profitable transaction there, or sort of just improving the balance sheet at a discount. So quite nice little ad there. So I stuck the Q3 numbers into my spreadsheet, sort of model for various Bitcoin prices, and it's still a little bit up in the air as to how much sort of direct costs and depreciation I should be allowing. Obviously, they've expanded quite a lot in Q3, so I had the Q2 numbers, and then I was timesing these by 4, obviously, to get an annual figure, but also times them by 2.5 to increase those direct costs to allow for their very large amount of expansion, and for the HPC stuff, because they're expanding that. They have given us a $49,000 per Bitcoin direct cost mining figure. So times that by the 3,010 Bitcoin I have them down for mining this year, you sort of get to about 149 million in direct costs. So if you add on sort of 100 million or so for HPC direct costs, then yeah, it's maybe not too far off. Depreciation sort of similar. I've put in the Q3 figure, and yeah, I'm timesing these by sort of 1.5 at the moment. You can sort of pick a figure, but this sort of seems to be that it's not going to be too far off. You've got to take these numbers with a pinch of salt. It's really just a model to see where we could be. General admin and stock-based compensation doesn't seem to change all that much. I've added 5% on that and annualized it up. And yeah, interest expense, income tax, and everything sort of largely stays the same. Obviously, while they're losing money, I've put an income tax refund. This sort of does always end up a little bit different to how you would show it here, but assuming they're making good money, then I've put 30% tax. They sort of play around with this and defer some figures and things, and won't always pay that amount. So yeah, you get to sort of turning net profitable in my eyes at 150,000, and sort of really decent profit at sort of 175 and 200,000, which obviously seems a rather long way away here. And keeping my sort of PE multiple expanding to sort of 40 is the big jump at 175,000, because net profit starts increasing. Profit or operating profit and net profit pretty much 4 or 5x compared to 150,000. So yeah, 40 times multiple and a 50 times multiple. If we get to 200,000, obviously everyone will be going bananas about Bitcoin miners, you would expect. So yeah, it's maybe not the best model. I think it sort of was coming out much higher figures before. Based on sort of 240 million shares. I think they're at 228 on their recent earnings. I think you probably easily get to, they might even be at 240 already, because we haven't had the Q4 numbers, and we're obviously in a month after that. So yeah, it's even at 200,000, I'm sort of getting to $25. I was sort of hoping for a bit more than that. Obviously, this isn't on a cash basis, so depreciation isn't actually a cash loss. You could sort of delete some of that out if you want, and sort of they'll be reporting free cash flow maybe, and not including this this depreciation, or you'll start seeing adjusted EBITDA or sort of adjusted free cash flow numbers, and trying to make it look a little bit more rosy. I haven't also, obviously they will be in the net profit figures, they will be reporting their gain or loss on Bitcoin. So they in theory could have about 2,000 Bitcoin on the balance sheet. I think they've got sort of 200 or 300 now, and if they buy back their Bitcoin as well, you could be getting sort of 2,000 Bitcoin by sort of say gaining 20,000 a year over the year. It could be 40 million gain. You sort of put that across, then it gives you another sort of $5 say on the stock price. If we were to call it, I don't know, 40,000 for the year, then ups it by another $6. So you can see sort of what difference that makes when they start saying gain or unrealized gain on our Bitcoin. It does make a bit of a difference, but not huge. But my sort of lofty, super optimistic target was about $30 to $40 if we got to 200,000 Bitcoin, and that would be lovely for the options. So we'll have to see. I think there's going to be an awful lot of manipulation of these figures, and discussion of adjusted EBITDA, adjusted free cash flow, operating cash flow, and all that sort of thing. So we'll see where we go. Just looking at economic news as well, we had some US PMI numbers as well. A lot of people are watching this ISM manufacturing PMI, sort of waiting for, basically thinking a lot of sectors that haven't been doing so well in 2025 is because the sort of manufacturing, this is more a global manufacturing index, hasn't really got going. Below 50 is sort of seen as contraction, and it's been below 50 for quite a while, sort of bobbing its head above 50 every now and then for 1 month, and then coming back below. And that did come in lower than last month and lower than expectations at 47.9. So still not quite got going. Prices, they're saying, are pretty high, 58.5. And not too much sort of happening. You do have the S&P Global Composite PMIs, which they appear to be more focused on the US only rather than global. It's, the company is S&P Global. This doesn't actually mean sort of global composite PMI. It's composite PMI from S&P Global. So you're more US focused, is 52.7, services 52.5. So expansion for just the US maybe, but we need more than just the US for a lot of the industries to do well. EU December inflation 2.3%, so you can see why they've been reducing interest rates sort of in advance. And we got ISM non-manufacturing PMI at 54.4, so the sort of services sector doing extremely well. And obviously, given America is 70% services, this is the number that they want doing well. But a lot of the industries that I'm invested in want the manufacturing index sort of doing well. So there you go. Depends what you're invested in. Thursday, sort of got some job numbers and bits from EU and the US. Nothing too much there. But it's Friday. The non-farm payrolls day was quite a mixed bag. 50,000 jobs down from last month, and last month was revised down, and it was lower than expectations. Private payrolls was lower than expectations quite a bit, although unemployment rate came down to 4.4%. It was expected to stay the same, and last month's was revised down as well. So they don't really know. They're constantly updating these figures. Jerome Powell did note that the non-farm payrolls he thought were overstated by, I think he said 60,000 a month. So that would put this figure negative if you sort of took that. He's sort of basically, I guess, preempting, next year or end of this year or something, having another like 600,000 reduction in the numbers like they did sort of late last year. So yeah, a little bit strange. And you did get a sort of drastic change in the Fed GDP now. So we've just sort of finished Q4 and a preliminary number for Q4. They're showing 5.1% GDP growth after this is after inflation in real terms. 5.1% growth, and admittedly that was lower than the forecast, but it's still incredibly high. And sort of digging into it, this is because basically they haven't imported very much. So you sort of had this all over Liberation Day and pre-Liberation Day. They were importing a huge amount because of you know tariffs, sort of potential tariffs. So they were importing a huge amount, not exporting very much. That pushed GDP down. They're now getting the opposite. They're not really importing much of anything and exporting a huge amount. I think a lot of people are thinking gold is sort of flowing out of the US, sort of various other things as well. Tariffs have sort of somewhat died down and people know where they are, so they may be getting their stuff back out of the US, and this sort of artificially creates a high GDP number. So you can expect to see some fair headlines about GDP doing extremely well, the US smashing it, and they're not really same as the sort of some of the figures last year weren't as bad as expected. So as always, the reality is somewhere in the middle. So checking in on the portfolio, as I say, gold and silver doing quite well. Coeur mining up 16%. Some of the others, Fresnillo is top holding now, 3.62%. Maybe I should have reorganised these last week because KGHM is up more, but it's not actually my top holding. 4.65%. I think copper broke to all-time high this week, above $6 in the US, and a new high in the sort of more global metric. But yeah, Coeur mining sort of really smashing it. Applied materials as well, 12.5%. That's pretty good. Amazon 9.6%. So got some pretty good gains. A few sort of smaller figures here, sort of negatives on CME and tiny negatives on Broadcom, Next Era. Samsung continues to be a good buy. Sold my Vici and put it into Samsung sort of a couple of weeks ago. And yeah, that was up double figures last week and 9.3% this week. So I should reorder these really and have Samsung much, much higher up. So they're doing well. Some other sort of decent figures. Deere, AGCO doing quite well. EQT, natural gas has sort of been taking a bit of a knock recently. So, oh, and Adecco Agro 8%. That's pretty good. Alexandria starting to come back a little bit. They sort of didn't put any more money into it, but yeah, it's sort of coming back ever so slightly. Sylvania Platinum as well. My sort of small little bet on them again, up 9% for the week. And Hive, of course, as I say, they've been doing quite well. We've got some other figures here. So I did sell my Coeur mining options because they expire next week. So had to do obviously something with those and didn't really want to buy the shares. Did sort of sell them a little bit early. They sort of up, a couple of dollars, I think, since I sold them. So could have got a little bit more, but don't like to gamble too much. And I've been sort of distributing some of that cash into Hive and a little bit into B2 Gold, but put quite a lot of that money into Euronext. So yeah, top that up to 300 shares. Just realised I hadn't updated that. So yeah, that's now quite a big holding now, and sort of towards my 2.5% target. So actually the total is a little bit higher than I first thought. So yeah, up about sort of a bit over 4% for the week. So yeah, that was pretty good. Sort of made my thoughts about Euronext last week. And yeah, options wise, Equinox doing pretty well, up for the week. B2 Gold, I added about 150 contracts this week. It is now a very, very large position. Equinox, I'm still thinking sort of every now and then about taking a bit more profit on Equinox. I sort of do think they can do a bit more this year as figures start to come out. Maybe we'll see what the Q4 results bring, because B2 golds should still be a little bit depressed with their sort of gold prepay. So Equinox should really be sort of shining for Q4 a little bit better than B2 gold, and I could, potentially make a little bit more of a swap. It is still sort of betting more on Mali and the risk there, but it's I think somewhat worth the risk. Yeah, the weekly figures again, sort of because I bought a lot of B2 Gold and Hive. These aren't actually up 24 and 32%. That's just because I've bought some. Although Equinox is up 8.45%, and Nakamoto up 34%, but it's basically sort of dead and can't see that going anywhere. So stock's at like 40 cents or something, and the options are for $2.50 in 2 months. So very much dead, I would have thought. Can't really sell them because the fees just to sell them would be nearly as much as I would get. So yeah, it's a little bit of a funny week. Bought a load more Hive, so that's up to 29,000 now, and I've got 4,000 worth of stock. So there you go, and a load of ETFs. Interesting. See where we go going forward. Obviously, my portfolio swings an enormous amount based on these options and gold and silver basically now, and a little bit of copper with these sort of top holdings. Equinox as well, Pan American, sort of being big holdings as well. So yeah, this isn't how I see the portfolio super long term. I have sort of all of these as overweight, and sort of partly some not wanting to hold at all in the future, Equinox and sort of Pan American. But for now, I still want gold and silver. So yeah, leave your thoughts in the comments below, and like and subscribe. See you soon.